passion and don't work for your pressures. Let the money work for you. कमाता तो बहुत हूँ, लेकिन पैसा कहाँ जाता है मुझे पता नहीं. There is no shortcut. Learning finance is not difficult. Taxes and debt are certain. Only way of making money from insurance is selling insurance. If you invest 15,000 rupees at the rate of 15% return for 15 years, that will give you 1 crore rupees.
Hi, welcome to Doctor's Diary. I have Dr. Rajendra Bhatia with me today. I'm sure you all must have seen his first episode by now. Dr. Bhatia is an established gynecologist at Chopra, which is in Jalgaon district in Maharashtra. But he's very passionate about financial literacy amongst doctors. He believes that financial freedom is very important in a doctor's life, and his aim is to educate young fellow doctors about finances and how to be financially independent of one's practice. Welcome, sir.
Good afternoon.
So, at the beginning, I would like to know from you what exactly is this concept of financial independence from one's practice? Tell us about that.
In simple words, it is like this. You work for your passion and don't work for your pressures. That is it.
Okay.
So as doctors, as young doctors, people are working very hard. They are competing with each other, trying to make ends meet and live up to their expectations. But then they should work only as much as they want to work and as much as they please. And they should not be worried about what their income will be. That is financial freedom.
Doctors do earn well, they earn reasonably well, but earning is one thing. More important is how do you manage that earning and how do you make provisions for your future. And I think that's a very nice thought that you would be sharing with us. So let me ask you, if you can just tell us how exactly a doctor earns.
In fact, for a long time, the doctor is in education. So maybe post-graduation is completed at the age of 30, 31 years. And then they start earning. Initial period, they have to invest a lot because our profession has now become capital intensive and we need a lot of equipment and everything. So they borrow a lot of money and they keep working very hard. Now their income starts, but they have an active life of 15, 20, 30 years, not more than that. So the graph goes that way and they don't have any other support. All the doctors are being charged at commercial rates. They have to pay their taxes. They have to fight with their status and they have to maintain their status in the society. And everybody expects something more from the doctor. So your patient expect that you treat them with reasonable cost. Your borrowers will expect you to pay up on time. So doctor has a tremendous financial pressure, especially when he is a breakaway or single person who is newly become a postgraduate doctor in a family. And all the young doctors have to go through all this. That is how they live. Yeah. And they don't have any retirement benefit. They don't have any social benefits. Nothing.
So actually, just for people who are not doctors, doctor is a profession where they start earning very late, anywhere between 30 to 35, they would start earning. And also a very peculiar thing about medical profession is that's probably the only profession where one has to invest a lot just to practice one's profession. It's not like you get a job in any corporate and the infrastructure cost is already taken care of by some company or the founder who has started the company. Here you are the founder, you put up a huge amount so that you are able to practice. So where this leads to is a lot of liabilities at a younger age at the beginning of the practice, and hence there is always a pressure to earn at least one particular amount so that the doctor is able to bear the cost and also to save something for his personal life and his family. So tell us, sir, how should one plan the finances at the beginning of one's career?
I would like to uh, make some point clear in the sense that we people don't talk about money, and
Very
earning money or talking about money or thinking about money is not very encouraged in our society. We are not taught about earning money, assets, liability, anything in our classes or schools or anything. Even in medical college, we are just studying about patients and treatments and everything, but never taught about practice management or economics or money management.
right.
One should learn about all these things, understand about money, and then educate oneself. See, what happens is we doctors feel like, "Arre, ab hum to bahut kuch seekh liye hai, ab now we'll manage everything in life." But you don't. Money doesn't behave that way. Money has its own set of rules, and if you learn those rules, then you will be well off in earlier life than what you would be. Otherwise, you learn the lessons very hard way,
Right.
and then it is probably very late to save for your retirement or save for your independence or save for your future. So what you should do is, whenever now in the time of residency, you get good amount of pay, which was not the case in our case. When I was a resident, I used to get 1400 rupees a month, and as a PG student, I used to get about 750 rupees per month. So there was nothing that I could save at that time. But now the residents get some good amount where they can pay taxes, they can pay income tax, create their balance sheet in the 3 years, 4 years they are residents while they are studying. And at the end of 3 years, 4 years, when they go to practice outside, what they can do is they can show their income statement
Okay.
to borrow, because borrowing, banks will ask you for income statement. And when you are young, if you pass and you have not saved anything, you don't have any money, you have not paid any taxes, nobody will give you a loan. Then the option gets closed. So even in the young age, one should start doing that. In the young age, one should start investing small amounts, which will become little larger in 3 to 5 years that he is studying. See, if you go for super specialization, another 2 3 years will go.
Right.
By the time you pass out, 5 6 years, 7 years, that is a very long period as an education. And for money, it is a big period to accumulate money. Believe me, any small amount that you can put away, any small amount, I say even 100 rupees in these days, we don't worry about it, we don't look at it. And long term, we don't look at it. We just look at anything at 1 or 2 years or 3 years. I'll be passing my MD, okay, then I'll be practicing, I'll be a king. Young person doesn't realize this.
Yeah.
See, there is no shortcut. Okay, for money there is no shortcut. You have to save. Whatever you save today will work for you tomorrow. Let the money work for you. The most important resistance I get when I tell people to invest and work on money and all that. Three most common. It for all ages. At the age of say 20 25, at the age of 30 40, 50 60, even 70-year-old will tell me, I have no time, I am educated a lot, and I have so many liabilities and expenses, I don't have money. And third, somebody else will work for me, I'll pay him 1%, 2%, 5%.
I was wondering, like, yeah, you mentioned about start investing early, but how does one go about it? Because economics is not a subject in medical schools, so we are not. Our mind is not trained accordingly. So what do we do? Do we go to any expert? Do we take help of any agencies?
Yeah.
What do
See, there are two things. One thing is learn yourself, and second thing is educate your children. So your next generation will start it early. How? Learning is available everywhere. Basic economics you can learn from internet, from Google. I was in a place where there was no investment avenues available. I had to go to 70 kilometers away at Jalgaon district place for my camps registration and investment and all those things. Learning finance is not difficult. So we doctors are professionals. We are super professional. We are cream of the society. We are 2% of society.
Right.
Why not learn that? I mean, it's very easy. How much time do you have to spend? not much. You spend hardly hour in a day for first few days. Then every 15 days, you just take a review of your finances. That's it. If you know all that, and then when you are interested, you can just keep upgrading your education as the case comes. Like if you come across a difficult case, what do? You read up again.
Right.
So simple. So that education can be done. That one part can be taken care of. Second thing is no money. See, whatever money you have, if you earn 10 rupees, if you earn 10 lakh rupees, you earn 10 crore. You have to manage that.
Right.
Okay. And the basic simple rule is if you save around 10 or 20% of your income for your future, long term, you will be through it. There is nothing more than that needed. And you can definitely find such ways to create that money to save. Second thing. Third thing, the resistance I told you is somebody else will do. Why would somebody else manage your money? He will charge you fees. Okay. So if you are giving him 1% or 2% of money, he will never do it. Have you ever come across a finance professional who earned money for you? No, he earns money for himself. Very simple. I mean, very blunt. Yeah. No agents, because they are not experts. Many of them are only agents selling some products to you. And they earn their commission. That's it. So why pay that? Now you have direct investment avenues where you don't have to pay any money. Brokerage, taxes, fees and taxes, that will be there. Yeah. But no middleman will be there. Yeah. Okay. So manage all those things. You have to manage everything in the money and then be financially free. Create wealth for yourself.
Again, I'm taking you back to my first question. Suppose there is a doctor or a doctor couple, let's say, who have just completed their graduation. They must be nearing 30s. So what should be the approach if they want to set up a practice, and what should be the time frame that they should have in their mind?
See, first of all, you should know your balance sheet, means where do you stand. How to begin with this? You should know what you have and what you have to spend on. Initially, what that balance will be skewed towards your liabilities. Okay, but then take care of your liabilities as much as you can, and with that you start saving for your future. You understand? Then how do you do that? You take your cash flow every month. You write down the income that you get and expenses that you have to do every month, because they are fixed. You have to do them. Once something remains out of that, that will be your corpus or investable surplus. Okay. Then once that investable surplus comes, that is the point where you start managing for your future, present and future, both. Not only future, your present also. Na? You have some short-term goals. What I call them is the goals. You want to buy a car, you want to buy a new sonography machine. Then these are your goals. So you have to assign what the goals are. So first of all, you should make 3 lists. First is your balance sheet, what you have assets and what are your liabilities. Okay. This is the first thing. Okay. That will give you where you stand and what you have to do. That will give you a clear picture. How many of us know our balance sheet? Right. Not many. Okay. Do we learn to read our balance sheet? No. Our chartered accountant gives us every year. Right. Do we open the pages? No. We should learn from where our income comes and from where our expenses go. That is so simple. Then your monthly statement, your income, expenses, and remaining is your surplus. I am sure everybody has some surplus. It may be sometimes 2,000 rupees, sometimes 20,000 rupees. We don't know, because we doctors don't have fixed income, isn't it? Yeah. Then you should have your goals fixed, and according to goal, you should invest in the assets which will give you returns so that you reach that goal. Otherwise, what happens is your money is lying in saving account. You have n number of insurance policies. Nothing is managed. You don't know where the money is going. कमाता तो बहुत हूँ, लेकिन पैसा कहाँ जाता है मुझे पता नहीं.
Yeah.
And if both are earning, husband and wife, then it is well and good. Then you should have some set rules which you follow. And if you follow those, nobody can stop you. I tell you, if you start at the age of 30, by the age of 45, you should be totally, in 15 to 20 years, you should be totally free of your pressures. You can work the way you want. You work only on the patients that you are happy with, and you don't have to just be under the pressure every day कि कल मेरा क्या हो जाएगा, what will happen if I lose my job, if I lose my patients, if somebody else comes, if new doctor comes. Nothing of that kind will happen.
Amongst so many products which are available for investment, how does one choose which is the right product for that person?
For that, I think there are some priorities which you should set right. Okay. As a doctor, because we don't have a financial support from somebody, so we should create our own first guard so that we are not shaken up by any emergencies. First thing is our emergency fund or emergency cash. Why do I say this? Because emergency fund is, every financial planner will tell you that you should have 3 months or 6 months money in your bank account, saving account.
Okay.
But we need some cash as well, because we have to pay our rents, pay our workers, and our income is fluctuating. So if 1 month it is down, next month it is high, so you should have a cash. So emergency fund and emergency cash, this you can park in a small liquid fund also, small amount in your saving account and some in cash at home.
Okay.
This is a must before you, because it will not shake you up. See, like if the corona came and you didn't work for 2 months or 3 months, then you will be like liquidating your assets and paying for your liabilities, which is not good, because then your assets will be lost. Okay, so you should have first an emergency fund and emergency cash. Second thing is manage your taxes. This is always a first thing that you should do. Any income you have to pay tax. Okay, whatever small income you will have to pay tax. Taxes and death are certain. That is what was said by Benjamin Franklin in 1745, and it is still true 275 years afterwards. Okay, so and it will be true in future as well. So in financial management, evading taxes is absolutely no. Pay your taxes on your money. Once you pay your taxes, use that money to invest and create assets and create more income. If you don't want to pay taxes, there are two ways. One is spend your money.
Okay.
We have a lot of exemptions on expenses as a doctor, as a professional. So spend your money. And second is, if you don't want to pay taxes, invest and defer the taxes. This you will have to learn. Okay, how you invest in an asset and create capital gains.
Okay.
Capital gains have lower taxes, and as long as you keep holding and don't redeem that asset, you don't have to pay taxes, isn't it? It keeps accumulating earning, but you don't have to pay taxes. Like if you buy a share and it increases in price, you don't pay taxes. Once you sell that, then you will have to pay taxes when the income is accrued, and that is a capital gains. It is not your income. So your revenue model should change. What we learn revenue as is, हम लोग ज़्यादा patients देखेंगे, we see 10 patients, we'll earn this much money. If we see 20 patients, we'll get more money. So what we keep trying is, keep trying working harder. Yeah. We see more number of patients, we want more number of surgeries done, but you don't see that not only money, the stress, the fight, and the toll on your physics, everything comes on with that kind of work. Okay, so what you should do is, you should have your revenue model like this. See, all millionaires, all companies don't work like this. They just don't create sales. If you see a balance sheet of a company, there are always other incomes. Okay, then their assets are earning for them. Okay, you should create more income tax head. Like every young doctor who is married should create an HUF, Hindu Undivided Family, if he is a Hindu. And HUF is a legal tax head where you can have one more tax efficient person in your family that will earn for you, that will invest for you. You can transfer some assets to HUF. Okay, if you buy, say you buy a sonography machine with HUF corpus, you pay the rent or you pay the amount to every month to that HUF. HUF will earn money and that will be tax deferred, tax saved. You pay taxes after particular limit, that is okay, but at least you will have one more person.
Yeah, if it is basically when there is single person earning.
No, when husband wife both are earning, they can be co-partners of HUF.
Okay.
HUF is created as a third entity. Your spouse,
Okay.
basically, and your children can be co-partners of HUF.
Okay.
Everybody can pay money to them. Everybody can take money from HUF. It can be like a person who is giving you money or taking money from you.
Okay.
One extra person in your family, one extra file income tax where you can save money up to say 3 lakh rupees or something. Then other exemptions are there, and you can use that money for yourself.
Okay.
Okay. Then the third thing is you should insure, or you should have insurance for everything. See, calamity can happen anytime. So there is no alternative to insurance. Isn't it? So earning member should have his own term insurance. Now here the word is very important. Plain vanilla term insurance. Insurance is an expense. Okay. Don't mix it with investment. What happens is we take n number of policies where you see that itna benefit milega, ye hoga, wo hoga. There is something called as rate of return on any investment, and insurance doesn't qualify for good rate of return. So insurance is a risk cover. Keep it there. Which insurance do you need? One is term insurance. Second is your health insurance for individual person in the family. Don't take any family or any floater or mixed or this or that. That doesn't save you money, but it will save you a lot of trouble when you need it. So individual medical insurance. And third thing is general insurance. So you should insure everything: your property, your machines, your working place, your home. Everything should be insured. It costs a very little amount, and the expense is tax exempt. You can claim tax deduction on it. So you don't have to pay tax on whatever insurance premiums you pay for general insurance. So it is a must. What happens is we buy a sonography machine, we have a service contract for the breakdown, and then you don't pay for insurance. So but once the guarantee warranty period gets over, it is uninsured, it is naked. So it should be insured for a small cost, and insurance will cover your emergency cost. What I am telling you is, it may not cover the total cost of repair, but it will give you some respite. Like for car, you always take an insurance for your car, and you don't see what income it is generating. You every year properly, religiously pay the car insurance.
Yes.
That is how you should insure every other thing. But car is not your asset. You should understand the difference between asset and liability. That's what I'm telling you. Your phone is not your asset. Your home is not your asset. Your place of work is not your asset. People count them as assets. Okay, so they are not your asset. When you're writing your balance sheet, what we do, even in the bank, if you go, you have a two-wheeler, yes, you have a car, yes, you have a home, yes, they will see that, okay, you have this. But you are not going to sell your house whenever you need it. Any asset is asset, a true asset, which puts money in your pocket. Your home will not do that for you. Because where will you go? Where will your family go when your house is converted in an asset? Your house is an asset for your children. It's not for you.
Okay. We just briefly spoke about insurance, but I want to stress. I want you to stress a little bit more about that, because of late, it's very sad that we are seeing doctors who succumb to a lot of diseases in a very younger age, in 40s and 50s. And personally, I feel 40s and 50s is a very, very crucial decade, because you are not very young. You have a lot of responsibilities. If you have children, they are at an age where they would be looking forward for higher education. So in fact, around 50s is the time one must have a lot of financial backing. And during that phase, if
Yeah.
unfortunately some family earning member is lost, it's a huge pressure on that family. So I want to ask, with this background, how important is life insurance in terms of corpus building? You mentioned very clearly that it has to be term insurance, which basically means that you will be
Yeah.
paying out of the pocket and you should actually forget about that money. So
Forget it. Forget it. Forget about that.
how do we plan for that paying of that insurance premium? And do you also feel that if, I mean, doctors do take huge amount of loans, particularly in metros. If you want to buy any property, the loan amount is very high.
Yeah. Yeah.
So do you suggest
Yes.
that one should take a life insurance against that loan, so that the loan liability is not passed on to the children or the spouse if the doctor is not alive?
The calculation should be like this: your liabilities plus about 20 times your annual income.
Okay.
Simple. Why do I say that? You have to pay for your liabilities. Your family should not be paying that after you go. Okay. And then 20 times is the measure of richness. See, if I have, say, about liabilities, see, if I spend 10 lakh rupees a year and I have 20 times that amount, that means I will live 20 years from now. Inflation, all those things are there. But simple calculation is, if you have 20 times money than what you spend today, or what your liabilities or expenses or total uh, yearly outflow inflow is, that will be your measure of richness. Okay, so your insurance should go to that level. Now insurance companies will give you insurance only on the basis of your earning, your income tax returns. And doctors don't have problem with that. For doctors it is easy to get insurance, but earlier you take it, lesser will be the premium. You understand? If you are at the age of 30, if you are a student, at that time only start trying for this term insurance. Afterwards you can increase once your income. But insurance is the first thing that you should do. Before going for any investment, anything, before you buy your dinner, you go for your insurance. That is how I'll tell you. Because when you are 30, a 1 crore insurance will cost you about 7 to 8,000 rupees. That if you go to 40, it will cost you around 30-35,000 rupees per year.
Okay.
So which will be very high. And all that amount, total amount, you can claim as expenses. You understand? Term insurance is a total expense. You understand? And forget about what will happen. Plain vanilla term insurance. Then you should have your health insurance. That also you should take it as early as possible, because once you become a diabetic, hypertensive, some comorbidities, weight, everything, that will increase the liability and increase the premiums. So earlier you take, better cover you get, lesser cost you have. So as early as possible, whenever on the day you become aware of insurance, you should go and buy good insurance. Buy online, buy yourself, talk to the company. Don't go through agent. All insurance companies offer you less, 5 to 10% less premiums to be paid if you don't go through agents. And if you go to LIC agents and all those, they are paid more than 30 and 40% of your premiums. If you see the earning, only way of making money from insurance is selling insurance. Otherwise you won't make money. Okay, so this is a plain simple, it is an expense, keep it there, finish, that's over. And general insurance, of course, anything that you have an asset, you consider as your useful thing which may break down one day, you insure it. From fire, from everything, for your building, your home, everything you should insure. So that is it. And insurance topic should end there. You should not spend more than this on insurance. If you have other policies, they have very less rate of return. Now here I will just talk about a little about the rate of return. Now where should you invest then? You should invest with the inflation and taxes. So post tax, post inflation return should be more. And where do you get those returns? You get only in equity and nowhere else. But that doesn't mean you should invest everything in the equity. But to get long-term good returns, you must invest in equities. That is how you should go.
Okay.
Okay. Now let us come to the assets. Now, what are the asset classes? There are 4 basic asset classes. There are 5, but 4 I'll tell you, and then 5th I'll talk about. Gold. Everybody is fond of gold. Everybody knows how to invest in gold. No, they don't know how to invest in the gold, but gold is a good asset class. Second is real estate. That is another asset class. People vouch on it. Indians are very fond of real estate. Okay, 10 फ्लैट लेंगे, 12 फ्लैट लेंगे, 15 फ्लैट लेंगे, लेकिन लेंगे. Okay. After that, equity, and 4th is debt. Okay. Now one should understand, as a doctor, I should understand what is a asset class and how they give return. Out of these, highest returns are given by equity. Now there are ways of investing in equity, stock market, one thing. Second is all mutual funds. They are shouting and selling mutual funds. Okay.
Yes.
Then debt is what, this is what fixed deposit, PPF, insurance policies. Everybody has heard that. But debt gives you security, not returns. Returns are low, but you should have a mix of both for your goals. Okay. And gold also you should have investment, but buying ornament is not an investment. It is consumption. Okay. That is like you buy clothes, it's consumption.
Yeah.
You don't think what return it will give and how will, you don't go and sell your blazer. So you don't go and sell your ornaments until it is a last resort.
Correct.
But you can invest in paper gold. And there are ways of investing in gold ETFs and gold sovereign bonds. Now government sells them. So if you invest in them, even small amount, now you can invest smaller amount in them. For gold ETF has now come to around 44, 45 rupees. So you can invest even 200 rupees in that. And buy them, you need an account, broker's account, and you hold them in demat form. There is no security question, no other thing. Taxation is very proper. No question of how to sell, where to sell. If you buy physical gold, you have to go and sell it. Then they will reduce the amount that you get. They will ask for some other things. And you have the problem of taxes and receipts and this and that, black and white and everything. But for paper gold, there is nothing. It's absolutely clean and good money. The gold can be a part of your asset class, but only in the long run. So you should have some percent, 10% of your portfolio in gold. Of total assets, 5 to 10% in gold. Okay. In the long term, it will give you good returns. But for 2 years, 5 years, 3 years, you don't invest in gold. Okay. Then you come for, see, all these classes, and there is a 5th class, which is a special class where you write a book and get a royalty, or if you have invented something and you take patent of that, if you have some special paintings or some collectibles, those are the special class of assets, but they are not common for everybody. So for highest return, you invest in equities in various ways. One of the best way to invest in equity for young people is to take advantage of tax exemption in section 180C, where you get exemption for 1.5 lakh rupees per year at present, and every year it may change. But that 1.5 lakh rupees comes to around 12,500 rupees per month. You invest in equity linked savings scheme, which has a 3-year lock-in, and it gives returns of equities in the long run, not for 3 years. You invest it for long term. So once you save those taxes, you use that for creating long-term wealth. Then you come for every goal that you have, your goal should be reasonable, attainable, and you should assign the time frame. Like if you assign time frame of say 3 years or 5 years or 7 years, 5 years or more, 7 years. So they should be divided in short term, medium term, and long term. For short term, you should always invest in debt class. Debt class is your saving account, bank account, fixed deposit, liquid fund. That's it. Then 3 years to 5 years. This is a medium term, where you can put in some equity in the form of balanced fund, balanced investments. Okay, this is about mutual fund, or you can use some equity component in that, but not much, because what happens is equity is a very volatile class of asset. But if you go over 5 years, 7 years, then you will have good returns. Then you have 20%, 15%. At least the index will give you 11 to 12, 15% return. And there are ways of investing in index. See, very simple investing. You don't have to study any stock. You don't have to study any mathematics. You don't have to look at the balance sheet. No ROE, ROC, POE, PE, PBG. All those things are all jargon. As a doctor, if you try to learn this, it's very easy. But you don't need to do that. You just go and buy index ETF. That's all. Nothing else is needed. There are various index ETFs. Gold ETF is there, and debt ETF are there. Finish. Your asset allocation is complete. So even if you want to create wealth in long term, very stable way, you can just go and invest in those things and don't bother about all the noise that is going around. But people go to trade in the market. Trading is a profession by itself. As a doctor, we know what a profession asks for, what an input, what level of input is needed. If you are a professional, you have put in 15, 20 years of hard work, study, intensive work. That is based on your highest level of intelligence. So if you want to make trading a business, then you put in that kind of a work. Enjoy. If you invest 15,000 rupees at the rate of 15% return for 15 years, that will give you 1 crore rupees.
Okay. So, sir, you told us about a lot of investment avenues and assets. So far, the concept of retirement never existed in a doctor's life.
Right.
But maybe people of our generation have at least started thinking about retirement, and that there would be some day where we will not be in active practice and maybe we'll be doing something else which interests us. So is it possible for a doctor not to work but still to have a normal life the way we are living a life now and maintain the lifestyle?
Yes. See, the retirement as a traditional way has been like this. At the age of 58 or 60, you stop working, stop going to the office, and then you stop getting the payments and all those things, and then you start getting pensions. That is what the retirement we saw in our parents or other generation.
Right.
But now the retirement has a different meaning, at least for us doctors. One thing is, we'll never stop working completely. That is one thing. What is happening is individual practice will be going down and there will be a group practice kind of a thing. And as a senior person, one can always join a group of young people where you are helping them in cases of emergency, complications, all those things, then looking after some intricacies, medical legal things and all that. And your expertise will always be useful. That is one thing. So you never retire. So your earning source may go down, but it will still be there. Second thing, by the end of retirement, what we should do is we should reduce our liabilities, like home loan and all those things and big things and equipment loan and all those things. They should be reduced. So you are not under pressure of paying EMI or anything. So you won't need that kind of income. Third thing is your staff and your workers will also be shared when you have a group practice. So retirement will be that little easier on your pocket. Okay. Then over these years, when I said assets, creating assets and they creating an earning source. So you will have multiple source of earning. If you have real estate invested, you get rent income, you have stocks and all those, you will get some dividend or other income. Then you can partially withdraw from your corpus. So there is a rule of drawl that if you draw about 5% from your total corpus, that corpus keeps earning about 10 to 12%. That corpus will last forever for you. Okay. So you can create multiple streams of income as well. That is how it is manageable to live in the same thing, same kind of lifestyle that you were living before retirement. Another thing I would add is post-retirement, people used to live for 5 years, 10 years, 7 years. Now we are looking at 20, 30 years post-retirement.
Right.
So I intend to live about at least 90 years. So post 60, 30 years would be my retirement age. So 30 years is also a long time. So conventional financial planner will advise you that remove your investment and put them into debt and put them into the fixed deposit. No, 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 no. You still continue with some component of very high return investment, reduce according to your risk, but still continue with that, because that will what be creating more wealth for you. Even after that, even after retirement, you will need wealth, because inflation is not 6% for us doctors. For us, for our kind of lifestyle, it is 15-20%, and for education, it is much more than that, isn't it? And for equipment, again 20-25% is the inflation. So that is how we should progress towards our retirement. And for doctors, the retirement will always remain different from other retirement.
Okay. So as an extension to that, I would also want to ask you, at times it happens that a doctor has set up a very big hospital establishment, and then the doctor wants to get out of the practice for multiple reasons. Is it same as selling any other real estate property, or do we evaluate that hospital little differently?
See, whatever you value your property at will never be valued as much in the market. That is the first thing. In India, there is some third party valuer who decides the value of your asset. What is happening is 20, 30 years ago, 40 years ago, when you established an hospital, the norms were different. Now the Nursing Home Act requires so many things. The hospital board, NHA requires something, NHB required some other requirement. So things have changed. Your place may not be up to that kind of a mark. So the norms keep changing. So that is how the valuation will change. But one thing is certain, think about your place as a small contraption that got you through the life, and don't think about it as a big asset. Get whatever you can from that. Only real estate, I'm telling you. Goodwill is totally different. Goodwill of practice can be transferred to a group of practice. I tell you, you can help set up somebody else who will probably pay for you, or you will work with him. That can happen in your hospital. So whenever you are valuing your practice, it will be valued differently by different people. Be reasonable, but get rid of it. Don't make it a burden in your assets. So let the assets have a goal, assign them, and then invest. So that will be even value of your practice. Your goal of going through life and doing practice for 30, 35 years has been achieved.
Right.
Isn't it? Now it remains, what remains is an asset.
Yeah.
And there the will is important.
Right.
Why will is important? Because you should write down the will and register it. It's very simple. There, it is now very easy to create a will, and where you should document all your asset properly, and which asset to be given to whom should be clearly mentioned, and it should be registered. And there is a national NSDL facility where you can create your will online.
Okay.
With nominal fee of 400 or 500 rupees. The website is easywill.com. NSDL website, easywill.com. They will help you create your will. They will give you all legal advice. They will give you all the executioner, everything. And you can register the will online. You don't have to go anywhere else.
You mentioned 3 categories who are around 30s, around 50s, and maybe 70s. So do you have any specific messages for them?
Yeah. No, for everybody. Learn about your finances, manage your own money. It is your money, honey. You have to manage. Nobody else will work for you. And always create a corpus, make your money work for you, and enjoy your life. And use your money, because That is very important. I mean, enjoy, make your goals come true. Like if you have a goal to have a good vacation, do it. If you want to use something for your charity, do it. I mean, don't worry about what will happen to your children or what will happen to your grandchildren. Indians have a tradition of worrying for our generations, which is not good.
So this was
Yeah,
very
yeah,
wonderful session, and it must be a very unique interview where a person in a white coat is actually talking about money.
yeah.
So that's a welcome change, because one has to realize that medicine is also a profession, and a professional has to earn something out of that profession. So you've given a very, in a short time, you are given a good gist
Yes,
of everything. I'm sure there'll be a lot of questions, and I'll be
yes.
happy to connect with you again, and we can take few questions.
Sure, anytime.
It was
Yeah.
nice talking to you. Thank you.
Thank you, Dr. Gauri. So nice. Thank you.